Thanks very much for speaking to us, sir. You've been there, you've done that, and which is why my first question is directed to you, which is absolutely direct. No repo rate cut, no CRR relaxations, and yet the top three lenders in India go ahead and cut rates by the end of the day. What changed in a matter of few hours? Because a lot is being read into that action.
You see, the effective communication from the Reserve Bank governor. Second thing is that earlier two cuts have already taken place. And correspondingly the interest rates were not reduced. So with some lag effect they have reduced, but I don't think it is the real transmission. You see, 15 basis point already rates have been cut by 50 basis point. And you see, what you forget, if you compare their PLR, in the last 5 years there is no transmission. I remember in 2008-9 when repo rate was 9%, CRR was 9%, then the PLR of the banks were 14%. And even when today the repo rate is 7.5%, CRR is 4%, deposit rates have come down, banks PLR at 14.75%, and nobody talks about that.
Right. Dr. Chakrabarty, bankers say there is no credit demand to be able to cut rates. Do you agree with that proposition at all?
You see, I know that if there is no demand for a commodity, the price comes down. That's what my knowledge of economics. But here I find, because there is no credit demand, I don't cut the rate. The credit demand is not there because your pricing is too high.
So do you think then an external benchmark like the financial benchmark which RBI is planning, is that the way forward according to you?
You see, unless there is enough regulatory surveillance, even a rate like LIBOR, the transmission does not take place. And you know today LIBOR scandal. What I say, whether external benchmark, internal benchmark, if we believe in a particular system, if it is not functioning, banks need to be penalized. That is what globally is happening. Banks are paying, you see, billion penalties because of distorting the LIBOR, because of distorting the foreign exchange rate. Now, if we have an external benchmark, unless the adequate surveillance is there, and there is a fear among the bank, if they try to play mischief with the rates and transmission is not proper, there will be a supervisory action. It may not work. It has not worked even a rate called LIBOR.
Mr. Chakrabarty, before we let you go, one final question to you, sir. Linking base rate to the marginal cost of funding, again, a lot has been written and said about that. Do you think this is a game-changing move of sorts?
Absolutely, it is not possible. It will be possible if your both asset and liability on the floating basis. Look, I give you an example. If I have my entire deposit portfolio today where average cost is 10%, and suppose tomorrow the interest rate becomes 3%, you cannot make that with 5% deposit mobilizing, I will be doing all lending at this percent. It cannot be happen. You see, look, the issue is that, but it can work on marginal costing basis, it can work on the wholesale costing basis. The Reserve Bank guideline was banks have to decide. There is nothing in that. But your pricing needs to be transparent and non-discriminatory. The way you calculate base rate, it cannot undergo a change from one situation to another situation. So I don't fight much on the whether marginal cost or wholesale cost. Each bank can take a view depending their asset liability structure. But more than that, it cannot be selective, it must be transparent, and it will be subject to the supervisory scrutiny, and supervisor need to ensure when the banks don't follow, there is very, very strict supervisory action. Then only this system will work. I am open to both marginal costing basis as well as total costing basis.
All right. Thank you so much, Dr. Chakrabarty, for joining in with that frank perspective. As always, appreciate you joining us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.